The Vee Trades technical analysis course is now live. Learn to read the chart the right way to prevent costly mistakes. Click the link below to start training now. What's up, traders? This is Vee Trades, and today I'll be doing a technical analysis breakdown for the Ishares 20-year Treasury bonds ETF with the ticker symbol TLT. This was a viewer's request, and thank you for your donation. If you want a chart analysis guaranteed to be done, please read the description below. Also, take a second to give the video a like and subscribe for more chart analysis. I appreciate it very much. This video is for entertainment purposes only, does not constitute any financial advice. I will first go over what I see in the daily chart and finish the video off with the weekly chart. Here we have the daily chart for TLT, and I'm going to go and zoom in on the price action since early August. Looks like we're still selling off. I believe in my previous analysis we're looking for a little bit of higher prices before continuation to the downside, because I did my analysis when prices closed at that 102 level. So we did gap up. You can see that we did gap up on Monday and traded sideways through Tuesday. Wednesday and Thursday and Friday was gap down days, so we sold off. So this market is definitely more bearish than I thought. So looks like traders are definitely respecting this channel right here. And since we did have that overshoot right here, that should have led to a breakout on the opposite side, but looks like we got caught up on the resistance side of this channel, which has been rejecting prices for several months now. So it looks like we were right there before we got rejected down. So that tells me that traders are probably not looking at this chart as a breakout on this side of the channel. It looks like they might just be looking at it as an expansion of the channel. So it looks like it probably just got wider. So the next target is right around the lower side of this channel, since we were just at the top side, and it's right around the $98 level. So it looks like I'll be expecting that target next week. Since we're still inside this channel, this ETF is going to be very bearish because we're still maintaining the angle, this descent angle down. Even if we do see a breakout of this yellow pattern, maybe even form of two legs like that, still expecting continuation to the downside because most breakouts will fail. So basically this market's still pretty bearish. Let me go and zoom out. So here's the macro viewpoint. You can see that we had a massive leg down right here. This was the second leg down. We should have reversed at the 109 level because these are two long duration legs down, so that this should have been an area where we bottom and buyers should have drove up the price. But we did get a bounce, but we started seeing continuation downside. So this market looks like it was taken over by the sellers. Aggressive sellers are still in the market. They're going to continue to bid down the price, and they're going to find buyers at lower price levels. It's all about supply and demand. So since those two long-term measure moves are already hit and we're still continuing lower, that tells me we could be in the formation of another leg. So this is the most recent leg, and if I move it down, you can see the target is right around the $73 level, which is very bearish. It's gonna be surprising if we get down this low, but technically it is possible. We'll have to wait and see, but as right now it looks like it could do it. The market can do that because we're still below the EMA. We're moving at this aggressive descent down. So that would be my long-term target at the $74 level, and that price target will be invalidated if we break above the 120 level. So as long as we don't go above the 120 level, this $74 target holds. But we're going to focus on the short-term targets first. So the next one is right around the $98 level, which is very close to double-digit territory, which we have not seen in the past 52 weeks yet. The lowest price is at the $147 level, $100.47 level, and probably gonna see double digits fairly soon. So let's go and wrap it up on the weekly chart. And here we have the weekly chart for TLT. Let me go and zoom out. You can see that we are trading near the 2014 low point, which is what was the bottom in 2014. So since we're right there, this could be a support where you can see a bounce up, but not all supports are going to hold, because there was support back here at the 116 level that the prices broke through, and support right around this 135 level, which the prices broke through. So it's going to test this level. If it holds, then it can reverse, but as right now, with this much momentum to the downside, it's probably going to break it. So I don't expect anything more than a short-term bounce at this level, even if we do get that. The next level is at the $88 level, which I've explained before. So there's not a lot of support between this $100 level and the $88 level. So once we break this and we do continue lower, $88 level is going to be near, and then also the all-time lows for the stock at around this $80 level could potentially be reached too. Really no signs of reversal as of right now. We're still continuing lower. So let's do a Fibonacci retracement from the low point to the high point. This will tell me if we're still kind of in like a correction territory. As right now, we're at the 786 retracement, meaning prices from the lows, all-time lows for this ETF, and all to the all-time highs, prices have gone down 78.6%. Well, not in terms of the Fibonacci sequence. So this tells me that this correction down is not really a correction anymore, because normally when you see a correction this much, it tells me the stock is very weak and the uptrend is very weak. So this pretty much just looks like 100% retracement back down to the lows, and most likely this is probably just a range pattern, a very large decade-long range. So if I drag this up, this fits the price action pretty good right here. So since we are just at the lows in the past, when we went up to the highs of the range, now from the highs of the range, we're probably going to go back down to the lows of the range, and from the lows to the highs. So this can take probably a decade to play out. Looks like, I mean, we're going to probably bottom or hit this range probably sometime next year. I would say Q2, Q3. Then from there, we could probably trade sideways before reversing, but it looks like a range pattern in my eyes. So this looks like where prices are heading next. So I'll give you guys an update next week, Saturday. Thank you for stopping by and checking out my video. Make sure to check out the rest of the channel, since you might be surprised what you can learn. Leave a comment down below on where you think prices are headed. Also share the video if you want your friends to learn about the markets. Lastly, I appreciate any feedback to help improve the channel, since I want to deliver great content to you guys. See you next time, and bye.